Give me one sec. All right, Zoom's trying to live stream. There we go. So whenever you're ready, Marie.
Okay. Hi, everyone. I see most of you. Welcome, welcome. Wanted to just welcome you all here today to our Meet the Masters for September. And yes, it's feeling a little bit like fall. I know I had to put a jacket on this morning. No more sleeveless tanks, I guess, at least for this week, right? But it's still sunny outside, so that's what's most important. So I wanted to first welcome all of you and also welcome and recognize our leadership team. I see a lot of you on here, so we'll go, how about left to right and going down, if each of you could just introduce yourself. So of course, I'm Marie Presti, I'm your president this year.
Morning, Michelle Hagstrom, President-elect.
I don't see Nora, so Corrine.
Good morning, Corrine Geiger. I'm the RVP for New England Region.
Good morning, Greg Hanner, Membership Chair down in Connecticut.
Christine McClellan, Finance Chair.
Okay, Yolanda, I think is next.
Fran is not here. Oh,
No.
Yolanda Lau, Network Representative for Connecticut.
Okay, and Christina.
Christina Silva, Mass and New Hampshire Network Director.
Hi, good afternoon. Caitlin DeSillo, Massachusetts Network Director.
And Christina.
Christina Silva, Mass and New Hampshire Network Director.
Was that a repeat? That seemed kind of funny. I know. I don't know what happened there. It was
That's all.
like echo.
Is that a repeat?
And then Joseph.
Joseph McCarthy, Network Director in Rhode Island.
Great. So it's great to see all of you here, and we're excited for our presentation today. I'd like to just thank all of our strategic partners who have helped us all year to allow us to put on some great events, and has underwritten us to be able to offer you a lot of events, and if you've noticed, for free this year. And we're going to continue to offer them for free, most of them, and that's what's exciting. So I'd like to thank our platinum sponsors, Cutco and Cross Country Mortgage, our gold, which is Bay Equity, and Kim is here today. Greater Boston Association of Realtors, Dave Conti from Leader Bank, Joe O'Sullivan from Statera Law, MLS PIN, Coast to Coast Closings, Skyburst Wealth Management, Puro Clean, Endless Energy, and our silver sponsors, which is Best Chimney Services and Gaffney Law. So thank you all. We really appreciate, and hopefully you've met many of them at some of the events, and we'll continue to meet them for the second half of the year. Okay, so before we get going with our presentation, I just would like to remind you all of our upcoming events. So next week on September 16th, we have our Connecticut networking event. It's going to be at the aquarium, and we're piggybacking off of the ECAR conference the night before. They're having a networking event at the aquarium. So you'll see not just our RC members, but a lot of Connecticut realtors there. And but the good news is that RRC, our Residential Real Estate Council for New England, we are underwriting it. So it is free if you're an RRC member to come. So we hope that you'll be there. Greg, do you have anything else you want to mention for that?
No, we've got some good food, a little bit of live entertainment at the aquarium. So it's going to be a good night. Okay,
great. And the next day we have a table at the conference itself. So we'll be trying to target new RRC and CRS designees. We want to encourage them to become members, and then get their designation. So we'll be there. So if any of you are thinking of going to the conference, we hope that you'll come visit us at the table. And then September 16th through the 20th, which is next Monday through Friday, it's CRS week. And what we're really excited to offer you is free webinars all week. So they'll be at 3 p.m. Eastern time. Sign up. You can sign up on the CRS website. and they'll send you the link every day to attend. There's some great educational programming, and you could even decide which ones you want to watch, but all 5 days will have programming. And then on September 26th, I don't think Vicky is on, our main networking director, but we are hosting a main class from 9 to 1 there. And then we're going to have a networking event, which is lunch from 1 to 3 afterwards. So that will be fun. And the class is being taught by Addie Owens, who is a CRS instructor, and it is a negotiation class, which is awesome. So then on October 7th, we have our Rhode Island networking event at Topgolf. Joseph, I don't know if you want to mention anything about that. You're on mute. Maybe not. Okay. Well, it's going to be at Topgolf. It's from 4 to 7, and it'll be at Topgolf in Camden, Rhode Island. And then November 6th, we have the Residential Real Estate Council Night Out, but we are hosting it, but it's for all of the Residential Real Estate Council worldwide who will be coming to the NAR event. And it will be from 7:30 to 10:30. And Caitlin, I don't know if you want to mention anything about that specifically, where it's going to be, how fun it's going to be.
Yes, absolutely. So we'll be hosting this event at Flight Club, the facility down in Seaport area. It's a great option to have some interactive games, to network, meet some individuals from across the country in RRC. Everyone's very excited about the event, and so we look forward to welcoming people nationwide to the Boston area. It'll be $50 for members and $75 for non-members, and we'll have a great time.
Awesome. And then November 10th, which is at the NAR conference, they're having a, we are going to have a breakfast. And Christina, I don't know if you want to just mention that real quick.
So it's going to be before the kickoff of the RRC team run. It's going to start at 6:30. We are going to have coffees, waters, hopefully some fruits, but we'll be right in the hotel lobby. And then from there, we can go directly to the starting line.
And you don't have to run it. You could be a walker or even a cheerleader, but breakfast will be free there. And yeah, it's for all RRC members who are going to be contributing and participating somehow, some way. So, and then we don't have a date yet for our holiday luncheon, but that is coming. And Michelle will give more information maybe next month, hopefully, in terms of that. But it'll be in December. And Michelle will be getting installed as president. Yay! And next month, we'll announce our upcoming leadership team and all of that as well. So we're excited for our 2025 leadership team. So, okay. So with that, I'm going to get out. And there is let me stop my share. I think that's the best thing. And there is a QR code. So I think if Greg, do you want to, I think, Greg, if you just put it back in the JPEG into the chat, everyone will be able to click it on their own computer. Do you think you could do that? I think that's probably the best
the
thing.
JPEG won't load into chat, unfortunately.
Oh, it won't. Okay, so let me try to share again that screen with the here we go. I think, can everybody see that QR code?
Yes.
All right, so take a second, take your phones, take a screenshot of it, because
Make it bigger.
make it bigger, make it bigger. How do I make it bigger? Let's try that. Nope, it's not going to be bigger. Sorry. So you
Zoom at
might
the
have-
bottom of the screen.
Is there a zoom at the bottom of the screen? Okay, let's try to make it bigger. Oh, there we go. How's that? Did that work?
Yes.
All right, so try to take a screenshot of that with your phone, and that gives you one link, but that QR code gets you to be able to sign up for all of our future events. So, and we're going to keep putting the rest of our events on there. We have most of them on there, and Greg is continuing to add them on there. So please click that and take a picture, and we'll keep using this QR code throughout the rest of the year. Thank you, Greg, for helping us put that
And we'll
together.
get October and November events loaded up there later today.
Later today. Perfect. Thank you. Okay, so I'm going to stop that, and then I'm going to stop that, and then I'm going to come over, I believe, to, let's see if I can find my PowerPoint. which is here. Can everybody see that? Let me know if you can. Nope.
No.
Okay, so I'll have to stop my share and then reshare it again. Some reason it does not working. How about that? Does that work now?
No, yep.
Yes, okay. All right, so, and I guess I should put you in slideshow first, right, Kim? Is that, or do you want to leave it this way so you can see the upcoming slides? So we'll start from the beginning, maybe?
Yeah, you can leave it there. I think it's pretty much more a chat. So that way we can move around from slide to slide.
Oh, okay, so stick with this. Okay,
Might as well, yeah, then we can pick a slide if we need it.
Okay.
Follow along with the conversation. And I'm really sorry, I just got a pop-up that says my system's gonna mandatory reboot in 2 minutes. So if it does, I will log back in. I'm really sorry. I don't know why it's doing that.
always happens when
I
you're
wrote
about
to
to present.
support, and I said, please don't reboot me.
Yeah.
See what happens.
So let me introduce Kim. Kim is from Bay Equity Home Loans, and she is one of our strategic partners, and she's been great, and she's attended many of our events this year, and she is here to talk about condo associations and some of the nuances of that. Michelle, do you want to lead the discussion, or do you want me to lead it? I'm happy to. Or Kim, maybe you can. Kim's going to be the one to lead it herself. Although
I
think
can, but I do think she got kicked off. So
Okay.
since she's disappeared.
All right, well then maybe we'll introduce her. Let me go to the next slide so we can, I'll be talking about her while she's rebooting. She is the NICMAR Business Partner of the Year, which is the North Central Massachusetts Association of Realtors. She was a nominee for the NICMAR Good Neighbor Award. She's been on National Mortgage News, Top 300 Mortgage Loan Officers nationwide. She's been a Bay Equity Top 100 Mortgage Loan Officers, and she is also a For One Child Chair Award recipient. I'm not sure what that is, so we'll have to ask her what that is. And she was personally invited by the Division of Banks to represent Bay Equity in this year's Community Reinvestment Act audit. And she has 25 years of dedicated mortgage experience. So she's got a lot of experience, and she's very knowledgeable about a lot of things. And we've really gotten to know her this year. And she's rebooting still, I guess, right? She's not back on yet? Okay. So maybe Michelle, I don't know if you or me want to try to start just getting the discussion going.
Yeah, so we had been talking about, we're seeing more and more condo guideline changes. And what does that mean? It seems like that people are having a harder time getting approved. And one of the things is that Kim is seeing, as I talked to her previously, is that oftentimes it doesn't come up until the end. So it's kind of getting ahead of that. So when you have a condo that you've got under agreement and it starts getting a process, figuring out, what questionnaires they're going to need and what guidelines are there out there. So we're seeing a lot of challenges and like insurance deductibles and how does that play into budgets and all of that.
I can tell you I have 2 closings that happened in the last 6 weeks. One got delayed and the second one got delayed for that reason and another reason regarding the association. So the first one got delayed because, as you said, Michelle, at the very end, it was a week before the closing, and they told us that the deductible, per unit deductible, was too low. And Kim, I think, is back on to kind of explain that. I believe. Are you back on?
I am. I'm so sorry about that.
That's okay. We already introduced you, and we just started talking about Fannie Mae guideline changes as it relates to deductibles and coverage. So why don't you take that part of it away and go into the details? I know there's a new algorithm that Fannie Mae came out with to come up with what the per unit deductible is. I don't know what that algorithm is, but I know I had 2 closings that got delayed in the last 6 weeks because of it. So.
Yeah, a lot of people are experiencing this information, and because of the turnaround time for us to get information as lenders, sometimes, of course, it's late in the game, and that can be surprising, and everybody has to kind of jump into action when that happens. So a couple of things have happened. Fannie Mae, Freddie Mac, they did change their guidelines as it relates to deductibles. And it's the deductibles that are really coming up in a lot of these late in the game changes. And the issue is that they've changed it to a 5% deductible, but they've now applied it to several aspects of condos. So I believe there's a slide in there a little bit further down that shows that it's per unit, it can be per building, and it can be, you know, based on the entire either gross income, or even a certain coverage. So there's a lot of layers to how the deductibles are being applied. And so when that happens, we really have to get into a solution mode. And there have been some solutions that have been presented. So some of it's a per unit deductible. So if the unit deductible exceeds 5% of the coverage, then it exceeds the guidelines, the new Fannie Mae guidelines. And so one of the ways to mitigate that, one of the ways we were successful was we placed an endorsement cap on all the deductibles. So that's a potential solution. It doesn't always work, but it has worked on occasion. The other thing with the per unit deductible is figuring out what it's for. And I think the slide, if you can scoot down, there is one that says per the deductibles covers it. You can also try to go back to the insurance and see if there was a way to move some things around so that the deductibles are covered and the policy will meet the guidelines.
You
but
want me to go to a different slide? Kim?
Yeah, I think it's probably, is it the next one there? If you just pan through them, I think it's higher than that. But that's the basic gist of the deductibles is it's 5% per unit. And so what happens is when you have these per unit deductibles that are exceeding the 5% of the coverage, that's when that policy is not meeting the guidelines. And so they do have to go back to the insurance. And in some cases, depending on the insurance, it changes the premium. And so that premium has to get voted upon or voted for by a committee meeting or an HOA meeting in order to determine whether or not they're going to go ahead and cover that. And I think one of the reasons it's happening is because, you know, like so many of us, insurance just renews annually, and some condos do review their insurance policies, but others don't. But they're certainly not following along with Fannie and Freddie guidelines as those are released. And so that's when you have that, you know, somebody might have closed. I actually had one where the guidelines changed in or around February and their master policy changed in March. And so we hit a speed bump on ours. The other thing that you can look at doing is if your client has it, not every client has it, but one of the ways you can also get around the deductibles sometimes is if you're having a full review for the condo is to try to get your buyer to the point where they might qualify for that project to get a limited review where the minimum down payment for a limited review is 10% down. And on a limited review, some of those requirements are lifted as far as the financial aspect of the policy, which is another way we got around it this year.
So what is the difference between a limited review and a full review? And are there other types of reviews, or how does that work?
Yeah, so if we go up to, I did have the PowerPoint up. If you go up, there's a slide there, Marie, that has all of the types of reviews, and it starts with full. That's the one. Yep. So the first review is the full review, and this is the one where, you know, it's the most common type of review. It's also the one that's going to most likely going to have most of the issues. And the full review is when you have a condo that might not yet be in the Fannie Mae system or a specific lender's system. So there's two systems that we use when a condo comes in. We can look at the Condo Project Manager, which is a site that lenders use, or the PERS, which is a Fannie Mae review. So a full review looks at everything that comes in. So it's going to look at the master policy, the budget, the condo questionnaire, and it's a really deep dive into the financial stability of the condo. Fannie Mae has found a direct correlation between the credit profile for the client and the financial stability of a condo or the financial health of the condo project. And so it's a deep dive. The master insurance and all the deductibles are reviewed. The condo questionnaire is a much longer condo questionnaire. It gets into a lot more detail. And then the budget will also be analyzed. And so what happens in a full review is all the line items are getting reviewed, and those line items have to meet the guidelines. On a limited review, Fannie Mae is recognizing that there's less risk associated with this particular financing because there's more equity available. And so it's a less riskier chance for them to absorb this loan. And so the biggest thing that helps you with a limited review is the liability and the fidelity coverages are not required to be reviewed. And that's where you can sometimes get around those deductibles if they're not reviewing that. So I had a condo this year. They actually just closed 2 weeks ago. Originally, it was a full review. The borrower was putting 5% down. And it failed. It was actually the budget, the master policy had been reviewed by 3 separate channels. And when we went to a 10% down, those coverages were not required to be reviewed. And we closed literally only 2 weeks later with the same exact policy and budget in place. So the limited review, the questionnaire is also much shorter, and they can only look at certain questions on the questionnaire to be used. One of the big things you want to make sure your lender is doing is if you do have a limited review, that they are sticking to only what's needed on that limited review. There are some lenders, banks out there that even though they get a limited review, will require a full review on the project. So if you do have somebody putting 10% down and you're getting hitting a speed bump, you may want to ask your lender, are you doing a full review or a limited review?
And
So
Kim,
it's-
when you said 5%, I just want to make sure everybody understands. It's 5% of the premium? Is that what we're talking about?
So this is the other thing about the 5%. It can apply to different parts of the policy or different parts of the coverage. So very similar to your policy, you might have a certain coverage for one aspect of your policy and a different coverage or deductible for another aspect of your policy. These 5% rules are applied to different parts. It's not like just coverage. It could be the coverage of that section. It could be the coverage of a building versus a unit. And it could be the coverages on the entire project versus that. And then you can also have phasing that comes into play. So when somebody comes up with a deductible issue, you really do want to kind of dive into, well, what coverage are we short? Is it a unit? Is it a building? Is it the overall policy? Is it a replacement cost? I've had ones where the deductibles met, but the replacement coverage was not enough. So it does apply to different things.
So it sounds all very complicated and involved.
Yes.
So when your client enters into a agreement to purchase or sell a condo, and what do you suggest that, we do as realtors to help the process or to understand it better?
Thank you. That's an awesome question. So the first thing you want to do is you want to make sure that your lender is actually logging in or having if they have a condo desk or a condo underwriter. We have a condo desk here. I can reach out to them at any time. We also have a condo tool that allows us to look up a condo. So the first thing you would want to do, and some loan officers will even do this ahead of time, and that is look up that condo on the Fannie Mae website or on the Condo Project Manager website, and log in and see what the status of that condo is. Because if you already have project eligibility through PERS or through the management tool, the project manager tool, that's going to be a much simpler process. it also can help your buyer to avoid looking at a condo that is already known to have issues. So the first thing is when your client is going to look at a condo, call your lender or your loan officer and see if they have the ability to look up that project in either of those two services.
Does anyone on the call have questions for Kim? I know we're short on time.
Is
I can
there-
also say that, the one that I had that got delayed, they were able to put them in a non-warrantable program for just a little bit higher interest rate. Have you seen that, Kim, come up as well, or?
Yeah, absolutely. That's also a great question. A lot of times with the non-warrantable, what you have is an additional down payment, the ability to put more down. So you can go from warrantable to non-warrantable where they might not be looking at some of these other details. They don't have to meet what's called the agency guidelines. Generally speaking, your buyer might have to put a little bit more money down. If they are putting as much as 10% down, they may want to try to run it through a limited review and see if they can get it through. And if not, then non-warrantable is the way to go. The one thing with the non-warrantable to watch out for is if you have any critical repairs or deferred maintenance, because if you have a healthy project and a healthy, it's also physically healthy, that non-warrantable option is fantastic. But if you do have critical repairs that are noted anywhere, you still could have a non-warrantable lender not be able to do it because of the repairs. Yeah,
Greg
that's
had
a
a
great option.
Greg had a question and then Christine Silva.
Yeah, I'll make it quick. So I've always looked up the on the HUD site, the FHA eligibility for the complexes. So this is taking it to another level, which is great. I threw in chat, it says condo project manager. So can we as agents sign up to be able to get access and then look at that before we're even showing condos? Would that be best practice for us as agents to do it before? Because going to contract, it sounds like going to contract on a unit that's non-warrantable versus warrantable would be a mistake to do.
Yeah, it could be. So currently, as far as I know, this condo project manager CPM is available to lenders. I did poke around it quite a bit last night to see if there was realtor access, and I personally couldn't find it. Everything that I saw lent to a lender login or a lender ID. But it's certainly something, you could contact them and see if it's something they would consider. But usually that's why I'll say, check with your loan officer or your lender because they can. We have lender logins. And you're right. The other thing, FHA and VA, and Marie, I saw you scooting down in the thing to go to the VA and the FHA. If you want to click either one of those slides, probably FHA one, which is, it's got the 2 down from there. There's your VA. VA is the easiest, by the way. If they're on the list, they're on the list. You literally don't have to do anything. And then if you go to the FHA one, I use this tool all the time. You can look up this condo project. And the good news is a lot of times if you have an FHA approval, it's one step closer. Chances are there aren't issues with this condo if it was able to get FHA approved because it's pretty much the same document checklist that gets reviewed for FHA.
All right, Christine, did you have a question?
Can you hear me?
Yes.
Okay, so you just answered my first question was, we go to this HUD.gov to find out if if an association is warrantable or non-warrantable, correct?
You would go to HUD.gov for an FHA approved condo.
Okay, how do I know if a condo association is warrantable or non-warrantable?
So you would call your lender on that to see if they could look it up through their condo project manager or through the Fannie Mae PERS.
So I, as an agent, do not have access to that?
As far as I know right now, no, unfortunately. I wish they would give you the tool.
Okay. And I
Yeah.
have one more question. So I don't know if you've ever had it, a loan kickback because of the 5%, but you stated that it has to be revoted on. Does that have to be revoted on just by the trustees or by the whole association? Because calling for a vote of a whole association could take a long time.
It could. And so it may depend, or it could depend on the relationship with the property management company to the project. And so projects, there's all different types of projects. I did have a slide at the beginning that can show a variety of the projects. You have conversions, gut rehabs, new projects, phasing, and then you have your existing projects. And then you have projects that have hundreds of units and projects that have 10 or 11. So if you have a major change to the policy, that would have to go back to the HOA for a vote. You wouldn't be able to make a major change because it's going to impact the budget, which would then impact the HOA dues and fees, which is another reason I think we have issues, because the condo unit owners will vote no change to the HOA fees, but we all know that inflation happens. But if there's a significant change to the policy premium because of something that had to change in the policy for it to be now meeting the agency guidelines or warrantable, then that oftentimes does have to go to a vote back to the committee. There are times the change would be insignificant enough, and they may have a tolerance, or they may have the reserves in their budget to cover it for that year and do a new proposed budget that they're then going to vote on down the road. So if you have a financially sound condo budget, you can sometimes find your way around that change to the premium without it having to go to a vote.
Yeah, I know from my two, Christine, my two transactions, both of them, the trustees could vote the increase in the policy.
Okay.
So it worked out, and it got delayed a week, and that, thank God, that was it. So,
Okay.
Yeah.
So thank you, Kim. If people do have additional questions, be sure to, reach out to Kim or reach out to your lender and get in front of it before the week before closing. Marie, did you want to have any final words and wrap up?
I'll stop the share, but I want to thank you as well, Kim, and thank you all for coming on. This recap will be on YouTube in the next day or so, and we'll post it also on social media. So if you want to watch it again. Also, Kim, we have the slides. Are you okay if we post a link to the slides? We can put them on our RRC Google Drive and then send it out with our newsletter next week. Are you okay with that?
Yeah, absolutely. Just delete that last one. That one was for formatting.
Okay, no worries. I'll delete that. So you'll have access to these slides next week, or maybe when, I know Courtney and I are working on the next newsletter. So when we send that out, we'll add a link to that on there, and the link to the YouTube channel to watch it again. So
Thank you.
great.
All right. Have a great day, everyone.
Thank you,
Thank you.
everyone.
Thank you.